You won't need me to tell you when leadership has transitioned from gold to silver. My experience is that when silver runs, you don't need a crystal ball to understand it's running. It really, really, really runs. Is that going to happen in 2025 or 2026? I don't know. What I do know is that when it runs, whether you had to wait 2 years or 3 years, doesn't matter much. You don't have to trust me on this. Just get a silver price chart going back to 1970 and take a look at what happens to the metal when it runs. It is truly, truly, truly astonishing.
World Bank analysts believe demand for silver is expected to grow steadily, driven by dual financial and industrial uses, with silver prices projected to rise by 7% year-on-year in 2025 and by 3% in 2026, on top of a projected 20% rise in 2024. Since the beginning of the year, analysts and experts have been predicting a bullish year for gold and silver. These forecasts anticipate a rise in the value of both metals, particularly in the context of a possible change in monetary policy on the part of major central banks such as the Fed and the ECB. Silver, in particular, is seen as having greater potential due to expectations of increased demand, especially from the industrial sector. Founder of RickRule Investment Media, RickRule offers his perspective on recurring trends in precious metals bull markets. He explains that these cycles often begin with gold being bought as a fear asset, pushing its price up. Silver has historically shown leverage to gold. This means that for every 1% increase in gold prices, silver has historically risen by 1.4%. This leverage could work in silver's favor this year, especially if gold prices continue to rise. It is believed that silver will overtake gold to earn 20% over the coming year, compared with 15% for gold. Looking at historical data, Rick compares past market cycles, noting that silver outpaced gold in the 1970s and 2000s once momentum shifted. However, Rick suggests that in the next phase, silver itself may outperform junior silver stocks, which have already surged. He emphasizes that silver bull runs are dramatic and unmistakable, urging investors to study historical charts to appreciate the metal's potential for significant gains. Silver mining companies with strong balance sheets and experienced management teams are able to capitalize on high silver prices and weather the storm of low silver prices. Now, we present the clips of RickRule's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
In my experience, history, I've been through, depending on how you count them, either 3 or 4 precious metals bull market cycles. Some fairly short, but they followed a predictable pattern. The market was kicked off by a fear buyer buying physical gold. Gold moved first. After the momentum was established in physical gold, some of the better gold producers began to enjoy better profit margins. There's a delayed reaction to this, of course. But when that happened, the biggest gold producers began to move. And that momentum attracted generalist investors. When the generalist investor became interested in the precious metals narrative, a couple things happened. Going right to your question, perhaps because of the lower unit price of silver, leadership in the precious metals market changed from gold to silver. Silver moved later, but when it moved further and faster. Sorry to keep going back to history, but let's look again at the decade of the 1970s. At the beginning of the period, gold was at $35, price controlled. Silver was at $1.20 or $1.25. At the end of the decade, gold was at $850. Silver was at $50. Let's go back then to 2000. At 2000, gold was at $253. And if my memory serves me well, silver was at $5 or $6. At the end of the decade, gold was at $1,700 and silver was back at $50. When market leadership changes from gold to silver, silver runs further and faster, but it takes longer for it to get started. You may remember, or you may not, I looked at my notes of our last interview, yours and mine, or second to last interview at the beginning of 2024. And I had suggested to you that the high quality junior stocks as a whole were really, really, really hated. I love to triumph my past successes on those odd occasions where I was right. And I was really right. And I said, I think that these silver stocks are a coiled spring. not because I think silver needs to do well over 2024, but rather because everybody who possibly wanted to sell these stocks has already done it. They're hated. And we've seen this weird circumstance in 2024 where the high quality silver juniors are uniformly up 2, 3, 3.5 times, while the silver price hasn't moved much. So I would caution you that it may be that in the next stage of the silver bull market, in the beginning of the market, that silver itself, the metal, might outperform the junior stocks because the high quality juniors have already had such a spectacular run. Looking longer term, again, in my experience, Doug Casey famously points out that the market capitalization of high quality junior silvers is so small. And notice that I say high quality. I'm not talking about the really junky guys. When the generalist investor becomes interested in the space, there isn't enough room. There isn't enough market cap to contain the money. From the point of view of what silver bullion does, which is to say sells silver, you won't need me to tell you when leadership has transitioned from gold to silver. My experience is that when silver runs, you don't need a crystal ball to understand it's running. It really, really, really runs. Is that going to happen in 2025 or 2026? I don't know. What I do know is that when it runs, whether you had to wait 2 years or 3 years, doesn't matter much. You don't have to trust me on this. Just get a silver price chart going back to 1970 and take a look at what happens to the metal when it runs. It is truly, truly, truly astonishing.
Despite the dollar's strength relative to other currencies, RickRule suggests that it's losing real value. He argues that with realistic inflation around 7.5%, holding a 10-year treasury at a 4.4% yield leads to a 3% annual loss in purchasing power. Over a decade, investors face a 35% decline in real value. In essence, central bank gold buying is showing a migration of the asset from west to east, with the aim of those central banks being to create a network of countries that have confidence to trade outside of the US dollar. Meanwhile, Rick draws historical parallels to show how gold has preserved purchasing power during periods of dollar decline. He highlights its rise from $35 to $850 in the 1970s and from $253 to $2,700 since 2007-2000. He holds gold as a hedge, cautioning that severe instability could push it up to $10,000. Gold has also been resilient in the long term, which means it's not just a situational hedge. From the time central banks began their big push to fight inflation in early 2022 through early November 2024, gold rose 53%. That makes it one of the best performing assets of the last 3 years. Let's get back to the interview.
I think the dollar will do well relative to other currencies, but I think the dollar will do very poorly in isolation. Let's look at the arithmetic around the U.S. 10-year Treasury, Patrick, in answer to your question. The Treasury pays you 4.4%. And if you believe the CPI stated rate of inflation at 2.6, you're getting a 2.2% real yield. Not great, not bad. You know you're going to get paid because if they need to, they can print to pay you. But if you change your inflation assumptions to reflect real arithmetic, what you see then is that the purchasing power of your yield and your principal is declining by 7.5% compounded. Now that's brand new arithmetic. If you take 4.4 as the interest number and you subtract 7.5, the deterioration in the purchasing power, what you learn is that in a real sense, you're losing 3% a year, every year for 10 years. The U.S. government is making you a promise, Patrick. If you lend them $1,000 today in a U.S. 10-year Treasury, they will give you back 35% less purchasing power 10 years from now. And they guarantee it. Let's look at history and arithmetic. In the decade of the 1970s, with the U.S. dollar losing 75% of its purchasing power, the gold price went from $35 to $850, a 30-fold increase. Let's strip part of that out, just for fun. Let's say that the move from $35 to $100 was due to the legalization of gold ownership. because gold had been price controlled for 40 years? So let's say at the beginning of the decade, just for fun, that gold was $100 an ounce. At the end of the decade, with a 75% deterioration in the purchasing power of the US dollar, gold was at $850, an 8.5-fold gain. Then let's fast forward to the decade 2000 to 2010, the last time the US dollar was under internal assault. At the beginning of that decade, the gold price was $253. At the end of the decade, the gold price was $1,700, a 7-fold increase. Or, just for fun, let's lengthen the time frame. Let's do 2000 until today. At the beginning of the millennium, gold was at $253 an ounce. Now it's $2,600, $2,700. What's that, an 8-fold increase, 9-fold increase? Gold has done exactly what it was supposed to do for the last 24 years. It has maintained its purchasing power. If I'm right, and the decline in the purchasing power of the US dollar is at 7.5%, it was less earlier, and gold increased in value by 8% compounded over 24 years, what gold did is exactly what it was supposed to do. When people with a short-term orientation, the greed buyers of gold, say, I own it at 27 because I think it can go to 3,200. That number becomes real to them looking at the immediate past. That's not why I own gold. I own gold because I have a visceral memory of the decade of the 1970s when the gold price increased in real terms 8-fold. I own gold not because I hope it'll go to 3,200, but because I'm afraid it's going to go to 9,000 or 10,000. Patrick, I would dearly love to be wrong.
According to the LBMA's annual dealer survey, 45% of participants expect silver to perform best than other precious metals. This could be an opportune moment for investors to consider silver's role in a diversified portfolio. Historically, silver has outpaced gold in bullish cycles, often accelerating once momentum shifts. For investors, could now be the time to consider silver's potential for outsized gains? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.